I'd like to introduce Shan. Shan is a Managing Director at Global Strategy Partners, and he's advised companies in the renewable energy, clean technology, healthcare and agriculture sectors on strategy and capital raising for Australia and international markets. Shan's also particularly active on outcome-based financing in public health in both developed and developing countries. And I'd also like to introduce Julie. Julie is the co-founder of Outback Spirit, who have been making great food for over 30 years. Julie and her partner Ian are recognised pioneers of the Australian native food industry and have been at the forefront of it since its inception in 1986. Ian and Julie's vision to bring Indigenous foods into mainstream food market and the company in the industry is the industry leader supplying the Outback Spirit branded range of products to supermarkets nationally in Australia. I'll pass it over to Shan so you can talk a little bit more about the work you're doing in impact investing. Shan also very recently spoke at Harvard Business School. I'd love to hear a little bit more about that and your work you're doing here.
I think the mic is... Hi everyone, lovely to meet you. So first of all, it should be clear, I'm not a female founder, but honoured to be in the presence of two. Talking very briefly about the work we do in impact investing. Essentially, impact investing is a lens, not an asset class. I'd like to clarify first of all. And ultimately, the things we invest in should stand up as financial investments, regardless and not as a subsidy for the impact we have, which I think is often a misnomer and somewhat has tainted the industry. And we do things like everything from early stage capital raising, where we're working with wonderful companies like Julie's on helping them raise capital from investors, through to public listings such as a company we listed on the NASDAQ earlier this year, which is a renewable energy company. So the work we do is often helping companies get their strategy right, all the way from the initial $1-2 million rounds of funding, through to later stage companies, even publicly listed ones, and helping them develop strategies for growth and expansion internationally. And I think I'm very fortunate to work with incredible entrepreneurs across this space. What I find particularly sets companies apart is those with a strong conviction in what they do. Because I think as important as the numbers might be in a business, it's actually the story and why people are here. I think as Julie will probably share shortly, the incredible story behind why Julie does what she does shows you the length to which a founder will go with their companies. I think is often a key determinant of success.
My turn. Okay, well, my partner and I started off in the food industry, and we had restaurants, and then we went into catering. And while we were stirring a pot of jam one night, we started thinking about where our food came from. And this is way back in the early 90s, 86, when I was very young. And it occurred to us that neither of us knew anything about Indigenous food in the commercial cookery area. And I made it my business to try and find out about it. And I thought, what a fantastic opportunity to actually develop products from the food that is grown naturally in Australia. And also by doing that, after some benefits, we can put down the supply chain back towards the Indigenous suppliers. So we just, nobody else had done it, and had I known how hard it was to be pioneering a new food group, and also working with Indigenous groups when this was not done before. I don't know whether I'd do it again with that information, but it's been incredibly rewarding, and we've set up now a supply chain that is ethically based, and we've also set up a foundation that we raise money through to support our Indigenous suppliers, and from the sale of our products, money goes back down through the chain to support projects through the foundation. So that's pretty much what we do, but there are restrictions. Being female, I have had similar experiences where I used to go to the bank to try and get some money, and I've figured out if I took an older male friend with me, I would get a better result. So that's what I used to do, and so we're looking now to expand and to, really try to really put some scale into what we're doing, both in food and wellbeing products. And by this, we pull the Indigenous communities that are involved with us and beyond, hopefully, with our growth.
Okay, thank you. I'm going to take it back a little bit to the basics as well. Do you think it's possible to make money and do good? So is there really no compromise? I know, Sean, you've touched on this, but Rebecca and Julie, does it impact financial returns if your organisation is purpose-driven?
Well, I think it's absolutely possible to make money and do good. It's what we're doing, and we are profitable. We always like to be a bit more profitable. I think there are added expenses, I suppose, in committing yourself to do a non-traditional path. But profit is just only one measure of why you should do something. Companies have to be profitable, but the other intangibles that you build up are equally valuable, and that's how we look at it. But I think it's important to be profitable, and I think you have to make the projects that you get involved in, like we're trying to do, grow this bush tomato plantations we have out in the central desert, and I think it's important for the communities as well that their activities have a good commercial return for them. And then the whole thing, goes along much better than if it's just not profitable.
Okay.
So if the question is if it's possible to make money and do good, absolutely. The question is how much money can you make with different causes? And there's some opportunity areas where you can make a ton of money and still do good. But if your main driver is the social mission, then you may have to be okay with you perhaps having a more modest financial performance compared to just traditionally, financially motivated companies. But that's okay. I think what confuses a lot of people is when you say, I can, be the same by having a double bottom line. I don't believe that you can truly have a double bottom line, because at the end of the quarter, you have to choose which driver is more important for your company, but you just have to be okay with whatever the consequence. You can still be very successful with a social mission, but the dimension of that success may depend on which social impact you choose to affect.
I think I definitely echo Rebecca's comments and Julie's that in some ways it can be a trade-off in certain sectors, but depending on which area you're involved in some ways, the more people you serve, actually the stronger your financial return, and very much depends sector. I'll give you an example. In a sector like, say, healthcare, which we're working in, one of our clients has a handheld ECG screening device which is being used in the community. So we're looking at working with Harvard Medical School's Center for Global Health Delivery on using this in projects in India. And at the same time, we're looking at this with the Rebeca Hwang Diabetes Institute in Melbourne. But the beauty is the more people we're able to reach in the community with this, actually the stronger the financial performance of the company. And suddenly linking it into a social impact bond where basically the government says, if we're able to achieve certain health outcomes over 5 years, we'll pay you a portion of the savings we have, because less people get heart attacks and strokes. And then you link that back to a bond which finances it. What then happens is actually the more people you serve, the more profitable the bond, and the greater the social impact. So yes, absolutely, in some sectors it can definitely be a trade-off, but in others you can actually align the two. But it's definitely not a panacea. I think too often it's painted as this magic bullet, which I think somewhat detracts from the sector. So we have to be selective.
Thank you. On to the next question is, thanks for that example. Do you have other examples of, I guess, companies you've worked with in raising capital? And Julie, what's been your experience? I know you've talked about walking into banks and having to take a man with you, but in terms of raising capital nowadays, your experience with Outback Spirit?
Well, it was always difficult for us to find capital. People didn't understand what Indigenous food was when we first started. And also there are some peculiarities when you work with these ingredients, because you're taking plants from the wild and either harvesting them wild or trying to get them to be cultivated. But you're trying to circumvent thousands of years of work, to get a plant that's high yielding consistently every year, etc., etc. So to avoid those things and the effect of climate change and just also peculiarities with Australian native plants, they'll fruit hugely in 1 year and they won't fruit that much for the next 2. So you've got to carry an enormous amount of stock. and you put your balance sheet to the bank, and you know you've got a small company with this enormous stock level, and they're used to saying to you, well, why do you carry all this stock? Why don't you just go and buy your stock? So we've found those sorts of things difficult to finance. I guess the fact that we've been around now for a while, we have some credibility and we have a reasonably productive relationship with the bank. But I think, our experience is we are trying to raise money to scale the business up, and it's yet to be seen how we go. But, I hope that we have a good experience in this area.
So in raising actually our fund, I had a very interesting experience. We initially thought that a lot of our funding would come from impact investors, people who have even allocations of money towards helping underserved minorities. And it turns out that we would go to them and say, this is why we're helping women in all these different ways. And they'll be encouraging to say, like, that's great, but we don't know how to evaluate that and we don't really want to invest in this. You would go to the same type of investor, sometimes the same person, and you would say, you know what, we changed our mind. We are not an impact investment fund anymore. We're going to make you filthy rich. But by the way, we're actually helping women. It's sort of a side consequence of it. And we're going to be investing in a lot of female founders. We're tackling a lot of pain points suffered by women. And then they will invest in us. So I think that even though the field of impact investment, and I do agree with you, it's a lens, it's not really necessarily a very well developed sector. It's all about marketing the same product in a way that your customer wants to hear about it. And I would say today, even today, most are better equipped to diligence you and to evaluate you if you're one of the two more traditionally than the combination of both.
I think I definitely echo Rebeca's comments that if you go in there saying, an impact investing fund, we're going to change the world, you're going to hit a lot of slamming doors in your face, right? But if you go in there and you've got a clear lens saying, well, actually, this is our path to profitability, these are the potential exit options, but by the way, we're helping thousands of, hundreds of Indigenous people in rural Australia, that's a very different story to simply going in there and asking nearly a not-for-profit philanthropy type ask when you go in. I think that's where it's important to be clear on what's your value proposition, how you're actually serving the community, but also what are the financial metrics linked to that? Because I think that's how you set yourself for long-term growth. Because otherwise, and I have nothing against this, you're running a not-for-profit, but it's important to be clear whether you're running a company or a not-for-profit in doing this. And I think it's important in trying to talk to impact investing, realize that ultimately for the sector to sustain itself long-term, we have to have financial sustainability, and that comes through delivering strong returns. And I think that's what we need to do, but do it while doing good.
Do you want to go through some more examples of companies you've worked with?
Yeah, absolutely. Happy to share examples. So another example I can share was a company we advised on their strategy for India and the Middle East. So they developed tomato and cucumber seeds and spun out of the University of Sydney. And these tomato and cucumber seeds were able to grow in the desert. They picked up a multi-$100,000 contract with the Department of Foreign Affairs and Trade. And off the back of that, we're helping thousands of farmers in Pakistan. And then we also got them into India and the UAE off the back of it. What was interesting was the shares that were placed at 25 cents were now trading, I think as of yesterday, at about 50. So, within the course of about 1 year, you've doubled your money on it. But at the same time, they've been able to have this tremendous development impact. Similarly, we had another company also in the ag space out of Mulgrave in Melbourne, who had an irrigation technology that uses 80% less water than drip irrigation. And we ended up getting them a joint venture with the UAE Royal Family's investment company. And they were simply looking at for-profit. Actually, no, they were looking at it from the lens of what impact does this have for our country's future. Because I think at that time it was Sheikh Mohammed, the Crown Prince, had come out and said, actually, water is more important for our future than oil, right? Which is interesting from one of the world's top oil-producing nations. But it's true for the long-term sustainability. And so the Royal Family Investment Company invested into the firm, and off the back of it, they got a multi-million-dollar project rolling out, I think, 36 hectares in the UAE desert. That's now still been expanding out sort of 4 years on. So these are the sorts of companies where actually the environmental impact, the social impact, by no means is diminished by that quest for a financial return. Yeah, is that
fine? I'm sure more examples will come up.
Yeah.
Questions. So globally, you've talked a little bit about Saudi, but what do you think is happening in this space? I know, Rebecca, in your talk, you mentioned Goldman, in terms of specifically product design, Goldman Sachs is doing something different when they're designing products for women because they behave differently and they have to change their product design. Globally, what's happening, and maybe Sian or Julie, where do you think Australia sort of sits in this space in impact investing or investing for, I guess, purpose-driven business?
Well, I'm not terribly au fait with this. It's a new area for me, and also for our foundation. The foundation is a separate entity, obviously, and at arm's length from the commercial business. But in both areas, we're looking at how can we work with impact investors. So look, I don't know. I don't know what the future is. It looks like it's going to be useful for a company such as ours and a foundation such as ours, and it sort of makes every sense to me the way that the impact investing, as described by Sian to me, would be suitable for the sort of activities that we have. It's certainly hard to get money anywhere. I'm talking from a small business perspective. I think that's probably all I can add. I don't believe there's people add much more.
There's quite a lot of awareness on the stats now. So the stats I shared with you on the power of the female consumer are well known. They're called womenomics or something like that. So there is like a field where people are collecting some of the stats. And so most major companies are doing some programs to increase participation of women in the workforce. A lot of perks for women, like Facebook and Apple, for example, will freeze your eggs for free, so that you have the option of not thinking about fertility in the long term, for example. The auto industry in the US was actually very interested in this topic because Toyota sales in the US have for a long time surpassed local manufacturing of cars in the US. And it turns out a lot of that had to do with the female consumer. Because if you look at Toyota cars versus like a typical Ford, these are much more female friendly. And so there was an example of I think it was a GM engineer who said, you know what, I'm going to understand why our cars are not popular with women. And he wore heels, put on some fake nails, and went into one of their more popular cars and decided to think about what it would be like for a woman to drive their cars, and it was terrible. The whole experience, it was chunky, like there's nowhere to put their phones or purse, but there was definitely that big cup holder for the gallon Coke that truck drivers drink. And so a lot of these examples that made them realize that there's a reason why more compact Japanese cars were being more successful in the US. So I think a number of companies are now realizing that they're leaving money on the table by not thinking about this female consumer. At the government level, you have a lot of efforts now, especially in Europe, with quotas and imposition of percentages in your boards and in your executive leadership team. That's another controversial topic we could talk about, but it's been one of the policy measures that has been quite common at the public sector level.
In terms of trend in the sector, and I think opportunities, which I think particularly important for young people and others in the crowd, I think where Australia has a real right to win, where we're sort of losing globally, is in the strength of our research, right? And the strength of some of the tech and the food innovations we have here, and really sort of the lack of depth in our capital markets. And I think over the past that's created a bit of a gap in the market, where, for example, in the field of research, right, we have about $10 billion a year being ploughed by the Australian government into research, and that pretty much hits a cliff, because then the next step to commercialization is drastically underfunded here. Because I'd say in a large part, we lack the depth of capital markets that you see in San Francisco, Boston, New York to make some of these things happen. The flip side of that is I think the industry's very quickly realized that we need to fill this gap. And that's where I think what we've seen increasingly is especially Australian family offices, a number of now funds set up to really tackle this smaller end of the market. And I think that's where, to go to Julie's example, a story like that's particularly appealing, where you've got a founder with a solid track record, knows the industry, knows the field, right? Where in the past, I'd say probably 10 years ago, it would have been much more challenging to raise capital. Now with the active family offices and funds, growth funds in this space, there is that investor demand for these sorts of opportunities. And I think especially where everyone is today and where the industry, both tech and non-tech is, there are tremendous opportunities to go and harness these capital, I guess, vehicles which are now being set up. And I think you talk about at a policy level, the government's actively driving that. Like today we're in an investor meeting where one of the fund structure has really taken advantage of the Turnbull government's changes, where I think you pay zero capital gains tax. In addition to that, I think you get an instant 10%, tax offset right now from your current year's tax bill for the investment you put in. So these sorts of incentives, I think, structurally help drive the industry forward. And obviously, as I mentioned, impact investing being a lens, which would cover these early stage companies, covers these opportunities, right? And it then unlocks pools of capital, which we can really start to take advantage of. I think the other final point I'd add to that is with the sort of valuations we're seeing in Silicon Valley, Boston, New York for startups, increasingly American funds have approached us to say, what opportunities do we have in Australia? Because for an equivalent company like Julie's, you might be paying a 10x plus multiple there, whereas in Australia, a 10x, so that's a 10 times multiple of, say, earnings. In Australia, that might be at 5 to 7 times, and so there's a happy arbitrage nearly in between, where you get a premium to what you'd get in the Australian capital markets, but a discount to what you get in the US. And down the line, there are opportunities to look at US-based listings or exits. So I think that's where the opportunities really open up for Australians. And in an increasingly globally connected world, you can really take advantage of the ease of doing business internationally. And I think the government's really supporting that. We've taken advantage of the Victorian government's sort of investment offices in San Francisco and New York for some of our other clients, in Boston. And it's been wonderful to work hand in hand with the government on going out to meet some pretty high level contacts which we wouldn't have otherwise. So I think it's really ripe.
Can you also ask a couple?
Yeah. Actually, you can, did you want to ask?
I just, coincidentally, I've been to a few seminars recently about something called slow fashion, which turns out to be either fashion that is organically, sustainably sourced, from manufacturers who have gone back to see where the products are coming from, where the garments, where the tailoring, etc., vis-a-vis, what has happened in Bangladesh and places like that. It also includes vintage clothing, which is, coming back. And the big market there is women who want to be sure about what they're putting on their bodies in terms of garments that are sustainable and ethically sourced. And I came to know that there's a big focus of impact investing on slow fashion because it has long-term advantages in terms of, doing the right thing by yourself, at the same time looking good in what you're wearing. So have you heard of that kind of industry as an opportunity for impact investing?
Sustainable fashion industry? Yes. Okay.
And coincidentally, today's Australian had a thing about a company called Fashion Soul or something like that, which is doing something similar. And the seminars that I went to, there were women entrepreneurs who were promoting this concept of investing in slow fashion, which is clothes, just as the food.
Slow food,
yeah,
exactly.
Slow food.
What we're doing.
What you're doing, yes, which I also attended coincidentally. But this was slow fashion, so leaving a good taste in your mouth at the end of it.
Okay. Have you had any experience with fashion, slow fashion?
You usually kick off, Rebecca, and I'll just...
Sure, absolutely. It's a field that's very popular right now. Anything that has the connotation of sustainable, organic, lack of chemicals. Honest Company has done a very good living of that concept and branding, and we have a lot of that. To add to that, though, one interesting phenomenon that we see as a movement is that millennials don't like to own anything. So that includes clothing. And that means that we see a lot of companies, it started with renting, designer handbags. And then it was like party clothes. And you rent it out, you wear it, and then you return it so you don't own it. And now it's been expanded to like maternity clothes because you wear it for 9 months and then you don't wear it for a few years, if ever. And recently I've been seeing also activewear. Millennials don't want their own t-shirts. It's really funny. And so I think that means that instead of having a ton of items in your closet, you want to have few items and wear them for a long time or recycle them and make them vintage clothing for the next generation. And that's really a trend that we see with this generation.
Brilliant. From our end, I think in the Australian market, we haven't seen many opportunities, specifically in terms of companies looking to raise in this sector, but definitely looking forward to seeing more. One of our clients out of San Francisco, though, is quite actively involved in this. I think they're doing some really interesting work where they're working with women in Rajasthan and parts of Pakistan to source basically scarves. So from what I hear, and I have to say this is anecdotal, apparently these scarves are the same quality as Hermes. I don't own an Hermes scarf. My girlfriend fortunately doesn't own an Hermes scarf. But I went into an Hermes store to touch it, and to my ignorant self, it appeared to be of the same quality. But what's interesting is they then also empower women in the process, because the designers are actually all typically, I think the statistic I saw was, I think 64%, I might be wrong on that, but it was in that figure, are women on the platform. And so what they do, they upload their designs, and these designs are then printed onto these scarves and blouses with very high quality silk, and then sort of shipped globally. And I think Google Ventures is one of their first investors in their first round. They're doing phenomenally well. I think they've sort of seen 50% plus revenue growth annually for the last 3 years. But in terms of in Australia, I think we've had this sort of Brunswick kind of collective, but I don't think we've seen that sort of scalable, tech-driven companies at that level of growth, but would love to see more.
Can you have, a question I have is, can you have slow fashion and scalable? Like, do those two things fit hand in hand in terms of investment? I'm hearing that there's not a lot in Australia, but I know, like you said, there's sort of the Brunswick collective. So, and there's a lot of smaller stores with people, that have been there for years, based in Byron Bay as well. They're ethical. Maybe is investment they're not looking for investment, or?
I could probably give an insight into that. When we started, we were very much into the gourmet specialty food store, and our products were priced accordingly, and, it was lovely feelings about, everything. And as we sort of got more involved with the people on the ground at community level, and the women there that, relying on the income from harvesting or growing, and it is the women who are doing this work, and it's women's business in Indigenous communities, there is a sort of an epiphany that you get, and you think, well, if I only sell 20 cartons to David Jones of one product once a month, that's not going to really do much, And so we embraced, the supermarket scene. Now, a lot of our contemporaries were horrified that we would go into the supermarkets, but we thought, well, we have to do this. We have to do this in order to start to scale this up and pull the revenue through so that it can be, in a small way through us reinvested, and encourage the sort of support around that. And that's what we've done. And now we think, yes, I think it can be scalable. It's got to be a plan. You can't just scale it up overnight, whether it's fashion or particularly food, because it's got to grow. But I don't see that the two things cannot be done, in my experience anyway, with food.
Do you have anything to add? Okay. Are there any other questions from the audience? Yep.
Yeah. Thank you so much for the very insightful presentations, and congratulations on the business. Just a question about impact investing, so I do a bit of work in that space and superannuation. How are you currently measuring social impact? Because obviously impact investing is about the intention to create social impact beyond financial return. So what are you currently, what are your measures at the moment, or frameworks are you using to measure social impact?
Just for the recording, how do you measure social impact?
Do you want to kick off, Rebecca? All right. Brilliant. Would you mind me asking which super fund you've been working with, or?
Yeah, I formerly worked for Host Plus.
Host Plus, okay. The reason I ask is I know one of the really active super funds we work with in this space, a group called Christian Super out of Sydney. And they have a very impact-driven investment thesis, especially their investment mandate is to invest with Christian values. And what that means is they're basically investing for social impact. But it's very much a finance-first lens, where it's what are the investment opportunities, and then what is the social impact attached to that. In terms of measurement, I don't think there's kind of an across-the-board benchmark. I mean, globally there is this thing called the GIRS, Global Impact Investment Reporting Standards. They've tried to make it like global accounting standards. But often the challenge is with companies, and what they've done, sorry to give you a bit more background, it's essentially like a catalog in Excel, right, with different codes, assigning different areas of impact, everything from employment, sustainable procurement, etc., etc. Where we often see it is you've got to look at the actual company and work back from there, as opposed to sort of trying to superimpose an external standard and really measure what it is the company does and what is the social impact of those things. So to give you an example, let's say something like Outback Spirit, the metrics we looked at is what is the Indigenous employment rate within the sort of farming community they're working with, right? What is the sort of growth in revenue to these Indigenous communities as a result, all of which you would be measuring as part of your business. And I think, you know, I was a former military officer, and what we believe in the army is what gets measured gets done. And I think the same thing absolutely applies here, where if you set clear metrics, and this is often the first thing we do with a client, that's what the company's going to drive towards. And I think it, I guess, will broadly fall in several areas: social, environmental, etc. The standard sort of ESG frameworks. But I think that's where both as companies and service providers and investors in the space, we need to be rigorous in actually bringing companies up to task and drilling down on what we want to measure, because that's ultimately what's going to get done. And often, ideally, those things are what's going to also drive the business growth of the company.
Yep.
Similar question, actually. I mean, the word impact investing itself is, I mean, to me, the maximum impact of investment comes from its return. And if you see in terms of investment bankers' terminology, even 25, 50 basis points are big money for them. So in terms of social domain, all these venture capitalists, when they try to fund, and suppose they're looking for some social objective in terms of impact, do you have any number that up to what extent they're willing to compromise with the average return? I mean, suppose I want to do a social good. Am I willing to, let's say, compromise of 1% or 1.5%, 2%, so that at least there'll be some let's say, those sectors in which more and more women employees are there, or those sectors which, let's say, those investment firms which don't invest in tobacco industry or liquor industry, any sort of my filter can be there. Is there any figure which these social investors are willing to put, okay, I'm happy to compromise 1% my return, but I want my investment should go only to impact?
So the percentage of firms that are looking to invest that will take a compromise based on social. Do you know those?
I would say, if I may, I think that may be founded on a potentially wrong assumption that once again there's this trade-off between the two, right? That somehow, you know, we need to dial back our financial performance to improve our social impact. And I'll give you a very clear example. One of the funds we know quite well is a group called Leapfrog Investments, based out of, I think Sydney is technically their headquarters, but they're in London, Singapore, etc. I think to date they have about $1.2 billion under management globally, and their mandate is to invest for financial inclusion and access to insurance, right, across developing markets. And I think in India, one of the big portfolio companies is Mahindra Insurance. In Sub-Saharan Africa, they have a number of portfolio investments they've made as well. And what's interesting is globally, they're in the top quartile of private equity fund managers. So on the one hand, while having this massive goal of increasing access to financial services and insurance, at the same time, and I think health is part of that mandate too, they've also been able to achieve that while being in the global top quartile of private equity fund managers. So I think in many ways there is that approach. Now, having said that, some investors definitely have taken this approach where they're saying, well, you know, a normal private equity fund manager might have a benchmark of, say, you know, S&P 500 plus 5%, plus 10%, right? Instead of that, they've said, no, we're having an absolute return hurdle of 6%, and we'll take a 20% carry over that. So just to give a bit of background to people who aren't more familiar with private equity, the way private equity fund typically works is you'd have a 2% asset management fee per year, and then you set a hurdle rate, right? So that might be 10%, 15%, typically market linked, right? And whatever you make over that hurdle, you keep 20% of that in your pocket. And that's where private equity funds really make their money, from that carry of their exits. So what's interesting is some of these funds have set a really low hurdle, right? Now 6%, because they were saying, well, we're having a social goal, therefore we should do this. Now that's not an approach I personally advocate for. In fact, I actually pulled some of our investors away from that, because this isn't the way to sort of run a fund.
Now, Sean, as a consumer,
as a recipient, yeah.
as a potential consumer of impact investing, I think this lower hurdle rate sounds pretty terrific. But I'll just
that answer your question. One example I might raise is social enterprises have been around for years. So a good example is Bendigo Community Banks. I'm biased, I'm a director at 4 community banks. But Bendigo Community Banks is Australia's 5th largest banking company. It was formed with a merger between Bendigo and Adelaide Banks. They realised quite some time ago that big banks, the big four, were pulling out of countryside towns, and there were no banking facilities available to rural people living in rural Australia. Now, these days we take banking for granted. You know, it's a race down to rates for banking. But back then, you know, it's as important as crucial services, like where do you get your loans from? If you're running a business, where do you get money from if all the banks are gone because the margins aren't high enough in Bendigo or in countryside? So Bendigo Bank came to the local people and made up a very unique model in the world about community banking. So of all Bendigo Bank, a number of franchises, I think it's about 300, are community banks. That means 60 to 80% of the profits of Bendigo community banks go back to the community, which is quite interesting. There's a network of about 2,000 volunteer directors. It's a fascinating model, and I think often there's a lot of buzz and hype around impact investing and social enterprise, but some, like you said, fundamental businesses driven by purpose go further. Yeah. Were there any other questions? Yep.
Just the one, and you guys mentioned about, you know, being financially focused. I was just saying, for a company now to approach an impact investor, to see how important is the tax-free status to be able to get that. In Australia, it's called DGR status, the gift receiver status, so that you can offer your consumers some tax benefit out of that. So just your views on that, and just, is that a driver, or is that something on the side but not your real focus?
So you're mainly looking at debt capital, right? Raising funding.
Yeah.
Okay.
I think a for-profit company wouldn't have DGR status, to clarify. So, you know, when you talk about impact investors, they're very much looking for for-profit companies. So DGR status would not be a consideration. Obviously, if you're a philanthropist, that's a different game. Yeah.
So a totally completely different area, you think?
Yeah, I mean, well, if you've got DGR if you've got DGR status, then you're a philanthropy, right? And that's why the tax office has given you that status. But an impact investor is looking for a for-profit company and to make an exit, right, at some point. But you can't make an exit out of philanthropy because legally you can't make distributions from those profits.
Julie, do you want to add how you've separated your foundation and the for-profit? Because I know that's a model that's quite unique in Australia. Street, which is one of the largest sort of coffee roasting companies, they've separated their sort of for-profit entity of cafes and coffee, and then they've separated the impact-oriented arm working with at-risk young people. Do you want to talk about how that separation might structure?
Yes, certainly. It came about, we decided in 2000 that we wanted to formalise our value chain and ensure that there were some benefits, you know, going through the value chain to the suppliers. And we tried a couple of models about how to do that. We started up a non-for-profit company with equal shares, and we were a partner, and our Indigenous suppliers all took a share. But that didn't work. That got taken over by one group who wanted to use it for their own, you know, purposes, and it became an unsuccessful model. And as a company, as a female CEO, I was getting very confused whether we were in fact a business, whether we were a charity, or whether we were some sort of industry development group, because in fact we were doing all of these functions within the company, and it was difficult to make proper commercial decisions. We've got a product in Coles which is called a Kakadu plum and chilli sauce, and at one stage we were selling that at a significant loss, just to keep the Kakadu plum harvesters going until we got to a certain, you know, critical point. And we've done this a lot, and it's a lot to ask a company to. You can take loss leaders, but you can't do it all the time. And we were doing it all the time. So in the end, we looked at what we were doing and decided to separate that role out of the business, the philanthropy, and set up a completely, you know, tax exempt, you know, public benevolent company, and that's what we've done.
Okay.
I'm a trustee of that, but that's all I am.
Thank you. We have probably time for one more question if anyone's got. Otherwise, we've got drinks coming out at 8, and if you've got questions, some of our speakers will be sticking around and you can ask personally as well. So if there's no more questions. Yeah. Oh, there's one more? Okay, sure.
It's been surprising, I mean, that amongst the VC, the females' proportion is why it's 2+. I mean, is it a kind of male-dominant club where the gatekeepers are so much strong, they won't let anybody in? Because by the end of the day, these VCs are, or the employees or part of the VCs, are coming from, let's say, top 30, top 40 US universities, most of them. And there, in a typical MBA stream, the proportion of female won't be less than 30-35%. So what's happening here? This is a puzzle.
Yeah, that's an excellent question. There's a lot of the boys club happening, and let me clarify, it's not just women who don't get in. If you look at the demographic of all the VCs in Silicon Valley, again, predominantly white, predominantly male, and also from a certain age group. So you're talking about 40 to 60. And so there are not many African Americans, there are not many Hispanics. It's very much homogeneous in every single sense. So because it's based on a partnership, just like law firms, there is a lot of social stuff happening behind the scenes. And so for many of the gatekeepers, if you basically have your fraternity buddies as part of your partnership, you don't want a woman to come and complain that you're going to a strip club. Right? I mean, that's the sort of thinking that happens in these things. That's an extreme example, but it really happens where they want to have an environment that's very comfortable and familiar to them. That's one factor. The other factor is that the VC sector is very aggressive. It's where if you find a deal, you know, here in Australia or in the rest of the world, it may be perceived that the founders are really aggressive to talk to the VCs and ask for money. In the US, for the best deals, it's the other way around. The investors have to go and court the founders, the best ones, and then you have to fight your way in. Like, please accept my money. I want to give you a bigger check. Please, what can I do to make you accept a bigger check? And it's very, very fast-paced. Sometimes things change within 24 hours. And VCs are known to be sharks. You know, they're very non-sentimental when it comes to having to screw other people over. So there's this notion that maybe women are not aggressive enough, just like trading floors think that women are not good enough to shouting at making those buy-sell calls. So it's a perception. It doesn't mean it's true. There are plenty of women who can be as ruthless, but there's this sort of assumption that it's a male field because of some of those characteristics. Do you have anything to add?
No, I don't.
Thank you. Thank you. There's actually one of my all-time favorite TED Talks is Sheryl Sandberg's, who's a chief operating officer at Facebook, and it's called Why There's Too Few Women in Leadership. It's a great talk. A lot of my male friends like it as well. And it's culture. It's how we raise our boys and how we raise our girls at the end of the day. The words we use, the language, how important that is. Like you were talking earlier when products are designed for women and they just made them pink. It's so, I'd recommend watching that. It touches in culture. I'll wrap up the panel discussion here. Thank you so much for your time. It's been insightful, and your knowledge is invaluable. I think impact investing is a space that's sort of growing, that's not spoken about enough. Purpose-driven business as well. The next Spark's also hosting an event on 24th of May. It's a private event by invite only, so if you're on our mailing list, you'll get an invitation. We're working with the MBA alumni to bring down Ken Siegel. Ken Siegel, best known as the guy who put the I in the iMac, so he's worked with Steve Jobs, and his talk will be looking at basically the idea of using simplicity to grow your organization and how Apple used brand, design and simplicity at the core of all decisions, and how you can also take that same principle into business. So we'd like to see you guys there. Jump on our mailing list if you're not already to get the invitation. And thank you for tonight.